What's up, tycoons? Welcome to the next episode of my stock research series. And today I'm going to be covering CAVA Group, ticker symbol CAVA, CAVA. And currently, at the moment in time of recording this episode, the stock price is at $95.39. It is yours truly, the tycoon himself, the mastermind behind the channel, Godfred Buffy. And so this video is really only for educational purposes, okay? It is not a stock advice for you to go and buy it. However, I do recommend that if the stock is something you're interested in, you do additional research, and at the end of the day, you buy it at your own risk, okay? Now, I'll try my best to make sure that my profile that I'm talking from on the top right on the screen is not in the way of any of the information that I'm going to cover in this session here. And so back to CAVA. CAVA is one of those exciting stocks that is slept on. And perhaps I think it's because it went public recently, just a few years ago is when it went public. And the stock has been very interesting to look at. I know there's a lot of AI talk, technology, data centers. You're talking about NVIDIA, AMD, TSMC, a lot of things happening in the market that's heavily surrounded with AI technology, generative AI, data centers and stuff like that. So there's way more attention on the technological sector than any other area. And so sometimes some opportunities definitely are going to fly under the radar and you probably might not even hear about it at all. Okay. So let's continue and let's dive further into it. And so I've owned CAVA stock since October of 2023. Okay. And I bought 50 shares. And since then, the stock has gone up 127%, right? So I've doubled my money for sure, but I've also got an added benefit on that. And so far this year, the stock is performing exceptionally well. And so we're gonna dive into we're gonna dive into a lot of the reasons why I bought it to begin with, right? Besides the fact that I really enjoyed the menu, they have fresh food, great taste, and is essentially the perfect place to eat for those of us that are a little bit more health conscious, right? That we're looking for alternatives aside from, say, just Chipotle or your typical fast food restaurants and fast food chains. So CAVA is one of those companies that's really interesting to look at. We'll also talk about its performance from a yearly standpoint, and then we'll also look at it from a quarterly standpoint. So let's dive further into the agenda for this episode right here. Cool. So we're going to cover the company overview, right? I always like starting off with the background and business model because not everybody that's tuning into the episode or channel might have heard of the company or ate at their restaurant, one of their franchise locations or not. So we're going to kind of give a nice background overview of the company, and then we'll move on to the actual research piece of the fundamental analysis, meaning, the company's financials, the competitive analysis, what my rating is or what I think of the company, right? So I always provide ratings out of 5, right? So it's always out of 5 stars. And then after fundamental analysis, we'll look a little bit technical as well in terms of the stock price performance versus its competition in this industry. And then we'll also touch on its performance versus the benchmark, meaning, the Dow Jones Industrial Average, the NASDAQ, right? And the S&P 500 performance in a certain time frame. I think for this research, I'm looking at it more so in a short term in terms of like year to date, more so than like super long term, right? Because the company, like I said, just recently went public. So there's not insane amount of years of performance to kind of compare them with. But then lastly, I'll finish off with my overall rating. So yeah, let's dive into it. And if you ate at CAVA before, definitely let me know what you think of their menu and their food. And again, these are stock researchers that the audience, those that follow me on Instagram, Twitter, on YouTube have asked if I can do a nice little research on them for them. So if you have any stocks that you want me to dive into and perform this type of research for, definitely send it my way. Don't hesitate. Put it in the comments after watching this, or you can DM me on Instagram at Black Tycoon Talk. All right, cool. So what is CAVA actually, right? And this is a very interesting company, and it is important that I provide enough context in this section here. That's why you see so much information on your screen right now. But the company is relatively young if you think about it, right? It was founded in 2006 by Ted. I can't pronounce. It's a group of them. It's about 3 people that started it, and I definitely cannot pronounce all their names. So I'm gonna stick with the easy names I think I can get right. So it's Ted, Ike, and Dimitri, right? And they started this company. They had only one restaurant back in Washington D.C. in 2006, and so their focus is really on Mediterranean-inspired cuisine, right? So the menu itself is Mediterranean-based, and the dishes is incredible. And over the years, they've expanded it into a fast casual dining chain, right? They don't call it like your typical fast restaurant. They call it a fast casual dining chain, and it has grown significantly over the last few years. Okay, and they currently have 331 locations, right? So think about that, from 2006 to right now. What, we in 2024? So let's say in about what? So 10 years will be 2016. Another 10 will be 20. So in almost 20 years, they've literally scaled to 331 stores that are in restaurants locations that are in operation right now. Okay, and the company went public just last year, June 15 of 2003, right? So they've been around since 2006, but they didn't go public until June 15th, 2023. And then, like I said, I bought it in October. So between June, July, August, September, October of 2023, I was doing some research on it, keeping up with the company, reading up on their filings and stuff to make sure that, hey, I've done my homework and research on it. And so I typically don't buy companies that go public that are freshly IPO'd like that, but there's something special here with this company, in my opinion, and I'm willing to take the risk on it. Okay. From a business model perspective, they really have four main buckets, I would say. And the first is restaurant operations, right? 2 is packaged goods. 3 is supply chain integration. And then lastly, technology and data analytics. So a lot of times people look at tech and they're like, oh, guess what? All these other companies in all the industries are adopting and integrating technology, data analytics into the entire business model, because it is proven that the data is really the new gold, right? The data is the money. If you don't know what story the data is telling, you don't know what story your business operations and decisions and the results of those decisions are, you're going to be cooked in this entire business landscape. Okay. So first, with restaurant operations, they have a fast casual restaurant, and they really, like I said, they offer Mediterranean inspired bowls, salads, and pitas, right? And so you, as a customer, you have a lot of customization within their menu and options that they offer, right? You can literally build your own meal by choosing like whatever bases you want, proteins, toppings, dressings, and they have all these other pieces that, like, incredible stuff. You can customize it so much, and it's so good and fresh, right? And speaking to the freshness of it, that's the second bullet right there on the one, which is the healthy options, right? So fresh, nutritious, nutritional ingredients in there, and they're focused on the health conscious consumer, right? As we all get older, we're starting to realize how important the food and the things we put in our body are in giving us the right energy, giving us the right nutrition that we need, and keeping us healthy. So this is the perfect place, a perfect location to eat if you're a little bit more health conscious when it comes to fast foods and / casual dining, right? Speed and convenience. It's fast casual format, right? So this allows for quick service. When you walk in there, I'm pretty sure they have all the data and analytics on like how long it takes from a customer to walk in and a customer to pay, right? To finish ordering and paying and everything of that nature. But it is quite fast. And they do have a lot of customers. People show up. It's always a line. I've never been there where it's empty in there. But you do get to pick your assortment and everything like that pretty quickly. So again, they're very, very busy all the time. And then secondly is the packaged goods, right? So aside from just the operations of selling to customers the actual menu and food to eat, they have its brand reaches by offering, packaged dips, spreads, dressings, and not just for the customers that are inside their stores. They also do wholesale with other grocery stores, right? So they have these other packages that they put in stores. And so if you go in grocery stores, you might start to see some of these products and packaging, and some of them are, hummus. They have a variety of hummus flavors and options there, and everybody loves hummus, right? I can't pronounce the second one, but it's a popular Greek yogurt. It's a popular Greek yogurt based dip. I don't want to pronounce that and pronounce it wrong. So That's that. And then they have a lot of different dressings and sauces that are Mediterranean based and inspired, right? So it complements their menu, everything they already got going on. So that's the second area segment of the business model. And then third is supply chain integration. Okay, so vertically integrated supply chain, and that literally includes like owning some of the products, um, some of the production facilities itself, right? So a lot of times, many companies will outsource or have third parties conduct manufacturing and distribution on behalf of the company, right? Kava, however, utilizes third parties, of course, but they also own some of these production facilities themselves, right? And sometimes it helps them maintain a certain level of quality control, accuracy, and it can help them manage costs, right? Things that are too expensive, they'll just outsource, have somebody else that's already doing it, have it already mastered, just do it on their behalf, okay? So they have some in-house production. Some packaged goods are produced in Kava-owned facilities, like I said, and then they distribute it across the various entities, the various grocery chains that they have business and contracts with, right? Also, ingredient sourcing. They're focused on high quality, and a lot of this sourcing comes from is locally sourced to ensure the freshness and sustainability, right? So they source from local environments that is within a good vicinity of their restaurant chains and locations. You know what I mean? Because imagine if you have to ship it from, say, California to New Jersey, the quality of the product, the quality of the produce, right, might not be in tip-top shape, and then therefore you lose nutrients, and it's easy for them to go bad as well, and that costs money, okay? And then lastly, technology and data analytics. So they have a huge focus on leveraging the data that they collect to enhance the customer experience and the efficiency of their operations, right? So you can order through mobile apps and online ordering, and they have a Kava mobile app, and it allows convenient pickups and delivery as well. And they've integrated some loyalty programs, right, to give us more incentives to get points, to be able to get certain things. And by doing so, they're able to collect so much data, right? When you order anything online, your information is stored, it is captured, it is collected. And same thing with the loyalty programs, right? You put in your information, your contact, your email. You know, they can reach out to their customers more that way, and they can provide a more customized experience and product and services for you specifically, you know. And they also make a lot of these decisions off the data of data. So they look at the analytics that are used to optimize their menu, their offering, their marketing strategies, right, supply chain logistics, and based on what story the data is telling them in all these different geographical locations in the U.S. and in different states, it helps them modify and adjust to what is really in demand, what customers and consumers are saying, what they're looking for, what they want. And so that is the value proposition for this entire company from a business model perspective. Okay. So now that we've gotten through pretty good background on that, we can now look at, okay, how do these guys make money? Right? Because yeah, it all sounds good, but at the end of the day, a business that don't make money will die. Right? So the first stream of income, if you will, is the restaurant sales. That's from direct sales to customers and consumers. And so, you know, the revenue from the food and beverages that they sell at their restaurants brings in a huge portion of the company's entire revenue, right? Second is the packaged goods. Like I said, they have sales of packaged dips, spreads, and dressing in grocery stores. And so they make money by having those products in all these different stores. And, you know, the broader public goes and buy these dips and sauces, and Kava gets a pretty significant cut out of that, right? Third is they actually do catering, believe it or not. So if you're having events, whether it's a corporate function, whether it's a small get-together or gathering, or you just want to cater some stuff to your place, they definitely provide those services as well, which is actually a really neat thing, because these days not everybody's inclined to cook. Not everybody wants to go do grocery shopping. You might have an event and you got to worry too much about catering and where the food is going to come. You know, these guys have really integrated that into their business model and their revenue streams really, really nicely. And then fourth is delivery services, right? They have partnerships with third parties that deliver goods to their customers and to stores, grocery stores. And, you know, that also, they also make money of that process, right? Because if I order and I just want it to be delivered, great, I got to pay a delivery fee or something like that, right? If they have third parties such as DoorDash, Uber Eats, Grubhub, right? If they have those partnerships, those third party companies pay CAVA. They pay CAVA for allowing them and having contracts with them to actually deliver the CAVA service and products to CAVA customers. All right. So that's the four main revenue stream that this company has. Now, like I said, they focus on very healthy food, and I think sometimes when it comes to restaurants, being able to show what the menu actually looks like and some of the options helps investors and consumers understand what I'm talking about, right? Because I can be talking about CAVA. If you've never been to CAVA, it's kind of hard to picture, okay, Mediterranean cuisine, what does that look like? And so I had this slide put in here so you can get a good visual representation of exactly, kind of how the bowls are set up. They have some pita bread. Okay. All right, they got corn, they got veggies, they got lentils, everything healthy of having they have, right? And then they have, if you're somebody who likes spicy food like me, you can definitely get spicy sauces, spicy. They have like the pepper stuff as well, right? So really good options, great food. It's something I actually enjoy going and eating there a lot. And plus, whenever I spend money there, I put some money back in my pocket because I own the stock. You get it? Yeah. All right, so CAVA not the only company that's operating in these restaurant or fast food / fast chain environment, right? They have a lot of competition, and I just have a few here. They have more competition than this, obviously, but I just have a few here. So the first one on the top left here is Yum Brands, and most of us don't know that Yum Brands actually owns Taco Bell, KFC, and Pizza Hut, right? So all those different brands and chains are under Yum Brands, okay? Texas Roadhouse, which is one of my favorite spots too. I actually haven't been there in quite a long time because I don't know why, but they probably have some of the best bread and how soft and nice the bread is, and that I don't know what they put in that butter, but I want that ingredient, that secret sauce, or whatever the ingredient is. So if you work at Texas Roadhouse, you can swing me the cheat code. Okay, so that's one of the competitors. Wingstop, surprisingly, is also a competitor of CAVA, and then I think the one that most of us can familiarize ourselves with and trying to understand CAVA the best is really Chipotle, right? Because though it's Mexican grill and CAVA is Mediterranean cuisine focused, but they kind of have a similar model in terms of somewhat in how they operate and kind of not the layout in your store per se, but the way they provide the service, right? I do think CAVA have a better variety of healthy options and just variety of options on the menu to pick from, right? Chipotle is a little bit limited in a way, right? So CAVA essentially has everything Chipotle has and some. Cool. So now let's really dive into the financial analysis, and we're going to start with the income statement of CAVA, okay? So if we look at the chart on the left side of the screen, we can take a look at CAVA's revenue, and this is his quarterly performance because, like I said, CAVA just went public not too long ago. We do have enough data from 2022 up to 2024, up to Q1 of 2024, right? And so if we looked at it just annually, it would just be 2022, 2023, 2024. But I think because it's a younger company that recently went public, it is better for us to do this research and analysis on their quarterly performance, right? It gives us just a little bit more detail on how the company's performing. So we can see that overall, the revenue has gone up, right? Between 2022 and between 2022 and Q1 2024, right? So Q1 2022 did decent, but then it took a nice little dive here a little bit, and then it kicked back up in 2023, and then took a little pause between the first few quarters in 2023. The last 3 quarters in 2023. But as we can see, Q1 of 2024, their revenue have skyrocketed significantly, right? So you can tell that based on their performance, it looks like the first quarter of each year actually sets the tone for for his annual performance with the following quarters a little bit, right? And so overall, it is nice to see how CAVA is performing, and I have a little bit of a summary at the bottom left here. So 12 months ending March 31, 2024, right? So that just means if we look at CAVA from March 31st, 2023 up to March 31st, 2024, okay? Their revenue combined for that for that 1 year stretch is 785 million. And this is a 29% increase from the previous year. Now, I think what makes CAVA special is the ability to show that revenue growth year over year right now, right? Because in 2021, the revenue was 500 million, right? So $500 million. And then in 2022, it went up to 564 million, which was a 12.8, so almost 13% increase from the previous year. And in 2023, for the year of 2023, it went up almost 30% to $729 million, right? So the company looks very attractive in how it's performing based on its revenue. And already, like I said, from March of 2023 to March of 2024, 785 million. Now, I suspect that by the time we get to the end of 2024, for the year 2024, its revenue could potentially touch 900 million to 1 billion, which would be huge. If they can cross that 1 billion threshold, that would be massive. So the stock would actually go up significantly, right? But just having revenue go up alone is not enough. Okay, what is the gross profit? What is that looking like? What is left after we subtract what we spent to make that revenue, so to speak, right? And so from a quarterly perspective, we can see that they've actually done a pretty decent job. Okay, so the gross profit is directly aligned and in line with CAVA's revenue. Okay, that's how it's really kind of set up. And so from that perspective, we can say, hey, year over year, their revenue has gone up and the gross profit has also increased at a pretty healthy rate, double digits, right? So for a new young company that just went public, is actually holding up his own pretty well and is going up. And so for that, I give CAVA's revenue and gross profit green flags because they're showing growth and trajectory in the right direction overall. Cool. So when it comes to the financial analysis, we talk about the income statement. So what is left after? What is the operating income? Okay. And I give CAVA a green flag here because they were actually though the revenue has been growing, they weren't profitable until 2023. Okay. So in 2021, the company operating income was actually minus 53 million. So negative 53 million. And then in 2022, it was minus 60 million. So negative 60 million. So that increased in a negative way. Okay. 2023 is where the magic happened, right? It went from negative 60 million to positive 5 million in operating income. And that is a huge increase of 107, almost 108% in the right direction, right? Positively. So that is exciting. And that's one of the things that has helped the stock price move significantly since it went public middle of last year. As we got closer to the end of the year, investors start to see like, oh, wow, these guys are actually turning the corner to becoming profitable in such a short time, even though they just went public, right? And if we look at the 12 months ending, starting with, say, March 31st, 2023 to March 31st, 2024, as of right now, they are at 16 million, positive 16 million in operating income, which is pretty fire. And if we look at CAVA's net income, which is really one of the areas I focus on revenue because they need to show growth and make money. But net income is really what they keep, right? It's like if you get paid in your check-ins, let's say you got paid $2,000 and your expenses is, say, $1,500, right? That means you have $500 remaining. That is the $500 is the net income. Okay, so we need to know how much is left after they've spent all the money they need to spend. Okay. So CAVA's net income was actually negative for a significant, basically all of 2022 going into 2023. But since Q2, since the first quarter of 2023, they've actually turned it around quite nicely. So the net income was negative 37 million in 2021, and then it went further down, right, to negative 59 million, which was a 57% increase negative right, in 2022. But in 2023, it flipped it, hit us with a positive vibe of 13 million in net profit, which is essentially his biggest net profit that we've kind of noticed so far from an annual perspective, right? And then we can see already they're on fire from Q1 of 2023 to Q1 of 2024. 29 million right here net profit. That is a beautiful thing to see. So they're doing quite well. You know what I mean? Like, they've turned the corner around. They've shown profitability very early in their public trading environment that they just went in last year. Cool. Another thing is we want to look at the company's balance sheet, right? That's very important. Skip ahead. Go back. Okay, cool. Yeah, we want to look at the company's balance sheet, right? Now, why is this important? Because we need to know what is the cash position and its current financial responsibilities and obligations, right? So cash on hand, we noticed that obviously the reason why the cash on hand went from damn near 30 million early beginning of 2023 to basically 340 million is because when they go public, because they went public, right? Investors are able to invest in the company, meaning we literally give our money to the company. And so the cash position goes up right away. Now, in CAVA's case, they've been smart with it. They didn't get the cash and just blow all the cash, right? They keep some of the cash, they keep some of the money on cash on hand. And so they always have room for flexibility. Now, this is beautiful to see. So I give it a green flag here. It's always good when companies get an injection of cash that is not debt centered, right? This is investors more pumping cash in. Sometimes they take, debt as well. And so that's what we're going to see in in total current liabilities. But before we do that, let's look at the total current assets. And this is on a quarterly basis. Okay. Again, because a lot of investors came in the ball game and the stock and the company is doing well, its total current assets is definitely significantly higher, which is good, right? We're looking at about 350 million to 352 million, which is nice because as an investor, you want a company that can handle its current obligations, right? So its current assets, you always want current assets to be higher than current liabilities. If we look at the chart on the right here, as of right now, 2024, its current liabilities is at 110 million, right? So if we look at, okay, cool. If something is to happen and they have to service this obligation, which is less than a year, which they would have to service it, current liabilities, any financial debt obligation that has to be serviced within a year or less, right? Less than a year. That's the best way to look at anything. Whenever you hear total current asset or current liabilities, it's talking about any financial obligation in less than a year. So from a balance sheet perspective, this is quite healthy and attractive. So I give it green flags, especially for a young company. All right. And then to take it a step further, we just saw what the current financial situation is, which is very healthy. But we also want to look down the road in terms of, okay, beyond the year, what does that look like, right? And so the long-term assets, which is beautiful. This is a beautiful chart right here. We've seen a beautiful bar graph. We've seen their long-term assets consistently go up over time, right? So right now, long-term assets total up to 650 million and change. And then the total long-term liability has actually come down significantly, right? So it used to be so much higher. It used to be basically almost 1 billion, close to 1 billion, if not 1 billion at one point. But now look at this, right? They've gotten that under control, moving really nice. Now is what? Just over 300 million, which is nice, right? Because we're looking at 650 million in assets, and now we're looking at 300 and a little bit more in liabilities. That gives us confidence. You always want to see assets. I don't care what company you're looking at. Doesn't matter. You want to see assets be significantly higher than liabilities, both on the current level and long-term level, right? And then also in totality as well, right? And so that's what we're going to look at right now. When we look at the entire company's assets, the company's basically it's basically sitting around that 1 billion threshold, right? So this right here is 1 billion as of Q1 2024. The company's total assets adds up to 1 billion. So what constitutes to this 1 billion asset, right? And we already know the formula for balance sheet is asset equals liabilities plus shareholder equity. And so when we look at the total liabilities, right, like I said, it used to be close around 1 billion and I'll say, oh crap, it used to be around 1 billion. And now, like I said, it's come down significantly. They've gotten a really good control of that. Now it's sitting around 400 and change million. That is very, very exciting to see that they've been able to reduce that by basically 60% in the matter of a year here, right? That's really nice. And so when we look at it from 2021 to beginning of 2023, right, shareholder equity was negative. But guess what? Since 2023 all the way till now, it has turned positive almost 600 million. And that's another reason why you see the stock growing significantly. Like I said, I bought it in October. It's already up to this date. It's already up 127% because the income statement looks good and the balance sheet looks good, right? They're already showing profitability. They already reduced a ton of their liabilities and increased shareholder equity. And that is always attractive. It makes for a good balance sheet, a good, strong foundation for the company. And again, don't forget this. The company's young, very, very young. All right, cool. So what does all of those jargon and everything I just said really means? From an income and profitability perspective, is total revenue of 259 million, right? But they've spent, and this is as of Q1. So Q1 they made 259 million. But they spent 245 million. And so they have a net income of 13 million for Q1 2024. And like I said, this is the best they've performed so far. And it's $11 million more than the net income compared to Q4 of 2023. So that's really nice to see that growth happening and then becoming profitability and turning the corner really nicely. Also, is the best performance since the company went public, right? It's been public for almost, they're getting closer to a year, but it's been public for a little bit, and so they're showing some profitability here. It's nice. Okay, they became profitable since Q2 2023. They've been going in the right direction, so hey, I like that. All right. In terms of net worth, which is the balance sheet that we looked at, the current assets of 352 million, right, significantly higher than its liability of its current liability of 111 million. So that's a green flag, right? It means that essentially the company can cover. A current ratio of 3.1 means it can cover its debt and financial obligations, all the financial obligations in the short term, 3 times over. So there's no huge problems there. A lot of things that come up they can easily handle and deal with, so it's not a problem, right? Very healthy and attractive due to its low risk in the short term, and they're showing that growth and they're showing that ability to reduce their overall liability significantly. So I'm hoping that by the end of this year, their liability is even lower. And they keep growing in the right direction, so shareholder equity can go up more, and that will send the stock price to the moon. Okay, and then total long-term assets is 653 million, and total long-term liability is 312 million, like we saw. And again, this is nice, right? Because we want companies with higher long-term assets than long-term liabilities, so it's more valuable. It can handle any of its total long-term obligations basically twice, right? So that's nice. Can comfortably weather any issues that come up, and its total assets right now, as we saw, is 1 billion, and that's basically 2.5 times its total liability. So they're in a very, very healthy state right now, right? Shareholder equity of 580 million compared to 570 million in the previous quarter, right? So in Q4 2023, shareholder equity was 570 million. Since then, in Q1, we already see a huge growth of 10 million in shareholder equity in Q1 2024. And this is a good sign because, again, as an investor, you want to see the equity, the retained earnings going up. You want to see equity value going up, return on equity, right? And so basically 58% of the total asset is shareholder equity, and that is nice. I'm hoping that can increase to eventually 60 to 65. That would be nice. And so, yeah, that's kind of, and so because of these, I give the financial rating 3.5 out of 5. Now, I know they all have green flags here, but it's a younger company and anything could happen, especially in 2024 with the elections coming up. There's a lot of volatility and uncertainty. Stock prices are high, so there's a lot of things happening. And because it's relatively new as a publicly traded company, it is generally a good idea to approach it with a little bit more caution. But for a young company, it is doing probably as best as any new publicly traded company that just IPO'd can do, in my opinion. especially in the retail environment that is in the restaurant business environment that is really, really difficult to operate in. Okay. So what does that mean? CAVA versus competitors. These are some key financial ratios. Okay. So gross profit margin, another reason why I'm impressed with this stock is because when we look at its competitors, right? Like I said, Yum Brands, Texas Roadhouse, Wingstop, Chipotle, Mexican Grill. It's actually gross profit margins are 45.2%, which is impressive. And that's for a company that is just kind of coming into the market and trying to gain market share. Almost 50% in gross profit margin is a healthy start, right? And the thing with CAVA is it doesn't need to overtake everybody in that environment. If CAVA even manages to get like 5 to 10% of market share, the company is going to do extremely well. So, at the moment, I don't know what percent in market share they currently have, but it's exciting to see where they go next, right? And from a net profitability perspective, the fact that they're even profitable, right? 3.75, not bad, not the best, obviously, right, compared to its main competitors. But keep in mind, its competition has been in business way longer than it has been, right? And technically, its competition has been publicly traded decades longer. And so CAVA coming in right now with almost 4% net profit right out the gate like that is impressive because they're almost catching Texas Roadhouse, right? And so we'll see how things end up in the next 5 years or so. See how much ground they can make up. Okay, so I give them a green flag for net profit margin because most companies go public in the first 5 years they are not profitable, hands down. That's just the norm. Okay, return on equity. So CAVA's doing a pretty decent job with 5% return on equity. Obviously, Chipotle has the highest here, which is understandable. Chipotle is a beast. But the fact that they're doing better than, say, Wingstop and Yum Brands shows that CAVA really are handling their equity positions well, and they're maximizing the equity that they have within the company. So it's nice. Now, return on asset, I gave that a red flag, not because the company's bad or is doing a terrible job. I gave it a red flag because its return on its total assets is only 2.9%, almost 3%. Not terrible, right? But if we look at its competitors, again, like I said, its competitors are all seasoned and grandfathered in, so they are expected to have a lot more return on their asset. But I do suspect that over time, CAVA is going to kick that up a little bit. So just a little red flag, but it's more like an orange flag, if you will. Cool. And then now we're going to look at a little bit of technical analysis in the stock performance, right? So we talked about the financials, the fundamentals, the balance sheets, the income statement, how it's performing fundamentally. And so now how does that aggregate and impact the stock price, and where is the stock price compared to its competition and the benchmark, right? So if we look at the four main competitors that I'm comparing CAVA to, CAVA is the blue line here, right, as we can see. And it has returned 121% year to date, meaning so far this year in 2024. So from January 1, 2024 to January, February, March, April, May, June to June 2024, CAVA has doubled, right, which is what we see right here from the Yahoo Finance chart. And then next we have Wingstop. Wingstop has actually grown 67%. Not bad at all. Not bad at all, which is the purple one here. And that is followed by Chipotle that has gone up 50%. And then we have Texas Roadhouse, 39%. And obviously, Yum Brands ain't doing good. They're getting cooked right now. Things ain't looking too popping. Nobody feeling them right now. All right, but it's impressive to see how much CAVA is growing. And partly because the excitement is from the fact that it's a newer company, a newer publicly traded company that just IPO'd last year, strong balance sheet, good income statement, and already showing profitability, right? And they have a good cash position. So it's really nice to see. And I'm glad that I've done my homework and I was able to catch on to it early so I can benefit from all these gains. I'm really hoping that down the road they can grow a lot. Having their stock price be like 500 one day would be pretty cool. Hopefully they do some stock splits as well. That will help increase my volume there. CAVA versus benchmark. Okay, so this is the DJI is Dow Jones Industrial Average. Okay, GSPC is really your S&P 500, right? Your SPY, your VOO, if you will. And then IXIC is your NASDAQ composite. And Again, CAVA is the blue, right? Year to date is where we're looking at, which you see right here highlighted. And it is blowing the indexes out of the water. Now, it doesn't mean that CAVA is always going to blow the indexes out of the water, or CAVA is, or like sell all your index funds and ETFs and then go and buy CAVA. That's not what it means. It's just comparing the year to date performance so far in 2024 to those benchmarks, right? And the benchmarks actually haven't done terrible, right? We got 18% here, and the 18% is for what? That's for the NASDAQ, right? And then the S&P 500 is around, what, 15% or so, right? Dow Jones Industrial Average is kind of sitting at 3%. So that's not performing quite significantly well, but the rest of the indexes are doing well, and CAVA is doing well as well. So any given year that your index returns more than 10%, chef's kiss. Okay, don't get too greedy, especially if you recently started investing and you see, stocks going up crazy. Some of your individual stocks doubling, like CAVA has doubled, right? Don't think that is the norm. Or you see the index return 25%, like 24% like it did last year. And so you expect it to continue returning that high profitability for investors all the time. Now, I urge you to pump the brakes and just be a little cautious, okay? We're just being a little spoiled over the last few years because of what's happened in the economy. But that is not the norm. Anytime you get above 10%, chef kiss. So what is my technical rating for CAVA? On a technical perspective, in terms of CAVA versus competition, I give it 5 out of 5. I mean, the guys are killing it. You know what I'm saying? Strong outperformance to the rest of his competition in that industry, as we just saw. Profitable with a solid balance sheet. And they are expanding their business, and they're actually expanding the menu as well, right? They're testing out some steak options within their menu and stuff. So I hope it makes its way up here if it hasn't already. I got to go check. I haven't been to CAVA in a little bit, so we'll see. But it is blowing its competition out the water. Speaking of water, I need some water. All right, let's continue. And then from a benchmark perspective, which is what we just saw, right? That's the far right here that we just saw. This is the benchmark. I give it 5 out of 5. I mean, these guys are killing it, right? The growth of the stock price compared to the market is even wider than what is doing with it against its competition, right? The returns for investors blows the market returns out the water. It is doing well. So I give it 5 out of 5 because overall, there's really no red flags to their business model, and I expect them to do well, especially this summer, right? We're all outside, we're at restaurants, we're eating out, we're checking out different things, we're health conscious. And so, yeah, I expect their revenue to continue growing. I expect net profit margin to be really good this year compared to last year. And so we'll see. We'll see where the stock ends up at. And then maybe down the road, maybe in a few years, I'll circle back and do another research on CAVA to see, to kind of give you guys an update on where it's at thus far. Okay, so from a financial perspective, I gave it 3.5 out of 5, not because there's any red flags or anything alarming, but because it is a young company. And generally, companies that just IPO are a little bit more exposed to certain risks within the market and the economy, and especially as the economy begins to slow down a little bit, right? They're a little bit more at risk compared to, say, your seasoned companies that have insane amount of money, crazy balance sheets, extremely profitable, and is already like heavily adopted and ingrained in our culture, right? Like look at Chipotle. Chipotle is like heavily ingrained in our culture. And I think CAVA eventually will get a little bit more market share and become more heavily ingrained in our culture too. And more people are going to know about CAVA this summer, okay? And so my final rating for financials is 3.5 out of 5. Again, not because of any red flags. And then on the technical side, like we just saw, I give it 5 out of 5 because it is crushing it. The company's cooking, all right? So that brings us to the conclusion and the end of this stock research. It's a nice little video for you to get a pretty good baseline understanding of CAVA, how the company came about, the business model, how they make money, their financials, the fundamental analysis there, the balance sheet, income statement, and then we looked at some of the technicals, meaning the profitability, the margins, and comparative analysis to his competition and the benchmark from a technical standpoint and the stock price performance. So hopefully you enjoyed this nice little video that I put together. If you're not already, if you enjoyed it, make sure you give us a like, give us a thumbs up, subscribe if you haven't, so when I make future research videos or any of the other financial topics that I cover on this channel, you don't miss a beat. Feel free to share the link to this video to anybody, and again, subscribe, share the page. You can follow me on any on all of these platforms and sites and social media pages, right? So I cover a lot of topics. So I speak on financial literacy, budgeting, stock market investing, money management, good financial habits and practices, how to save money, how to invest your money, where to invest your money. I cover 401ks, Roth IRAs, you name it, the entire stock market asset column. I cover individual stocks as well, as you can see just now. So until next time, stay tycoon, happy investing, keep learning, and keep watching these videos, and provide feedback. If you want to see me mix some things up, feel free to let me know. If there's a stock you want me to look into because you might not have time, or you maybe don't know how to go about it, I'd be more than happy to, okay? Because I work in corporate finance, so I'm around the financial markets all the time. I know what's happening. I'm around the economy very closely. So, feel free to lean on me if you need somebody to do a little bit of research to help you out and help you learn more about stock market investing. Again, we're all here to learn and grow, and my hope is that, you take full advantage of this channel, and so you can build wealth, not just for yourself, but for generations to come and for the broader community and population at large. So stay tycoon, like I said, and happy investing. I'll see y'all later. Go get you some CAVA to eat, and don't buy the stock only after you've done some research. Cheers.